Welcome to India Market Open midweek. It's risk on for global equity markets and back home as well. Implied Nifty looking good. Crude is not too bad. Wall Street had a good run and earnings have been largely a mixed bag, I'd imagine. A couple of big ones that we're watching out for this morning as well.
Yeah, it's a big day, big week for earnings, of course.
Nifty
but
50, yeah.
Three Nifty 50 companies, a lot of other companies, and right in the midst of consumer company results and commentary, more importantly. I mean, any of us will talk to Tata Consumer today. Would love to know what that commentary is, whether I do or either of you two do. And then there is HUL, then there is Nestle. So it's such a nice week of earnings, which will give a sense of which way the consumer might be bending towards. So I think it'll be interesting.
Yeah, and whether that same sort of trend of discretionary over basics continues. But Tata Consumer numbers not too bad at first cut. The net profits are down because of exceptional one-offs, etc. But we'll come to all of that in detail. So much to talk about. Suffice to say, on the top of the show, global cues are looking good for a second day in a row. Concerns seem to have been shrugged off for now. So the up move continues in the US and it's largely an earnings-led rally there as well. Most of the numbers that have come out have beaten Wall Street's expectations, and that's what's really working for them. 3 of every 4 earnings on Wall Street is a beat. Think of it this way. Tesla numbers were poor, but the stock in post-trade future trade actually was up about 9%. They have lost revenue this year. The sales have gone down. They've had to cut prices. So nothing has worked for Tesla, as was widely expected. But when Elon Musk comes and says that I'm advancing my timeline for when my cheaper EVs are going to roll out, the market has greeted it positively and with a thumbs up. So I would say the overall mood is definitely on an upswing. And one of the reasons, perhaps as far as bonds are concerned at least, is the PMI data that has come in. That's shown actually a contraction. It's a 4-month low. The US PMI data is at 49.9, which then again raises hopes that there may be more and enough coming for the Fed to start cutting rates. So you've seen the Treasury pretty steady, still at 4.6, but not too bad. On crude, those concerns seem to have swung the other way. In fact, there's higher US inventory than was expected, so crude has been fairly benign and no new conflagrations really between Israel and Iran. So that has kept things fairly calm. As a result, you're seeing Asia has opened largely in the green. It's been pretty decent, and we're hoping that Indian markets open well as well. Implied open at least suggests that you're going to have a spot of green on top, 77 points up perhaps on the Nifty. I just want to pull up flows as well to see what's moving this market, and it's definitely, as far as India is concerned, it's domestic consumers and domestic investors. 2,900 crores in purchases yesterday. FII sold 3,000 crores, and this interesting data bit that our producer Mahima has also pulled up, and we'll talk a bit about it. What kind of net investments we've seen from FPIs since the beginning of this year. January was the big sell. February, tepid, I would say, 1,500 crores or net. March was good, 35,000 crores purchased, but in April so far, already 7,100 crores down. The question is that June 4th onwards, when the results come in, does everything change? And that really is the point, isn't it, Niraj? We were talking yesterday at closing about the VIX and the big plummet over there. Is this confidence, overconfidence, super confidence on election results, or is something else going on, and is that playing out?
Just very quickly, while you're talking about equity markets witnessing outflows, interestingly, debt markets, which has consistently seen inflows coming in, is actually seen an outflow in the month of April so far. So there is something up. Maybe it's higher bond yields, which makes Indian paper not as attractive potentially, or the uncertainty around the currency as well, or geopolitical stress. But one way or the other, all that excitement with our inclusion in the bond index may be peeling off just a tad bit.
Maybe for now, like I said, maybe June 4th onwards things change, but we'll wait and see.
Yeah, it could be that. I mean, because I posed this question to a lot of people about how in December, when the 3-state verdict came in and everybody said that, will we see FIs who are hitherto shying away put in money from Jan itself. Everybody said, okay, hey, we thought that would be the case. That's what the note suggested. But some of the clients are saying that, no, we will wait for the verdict to come out and then put in the money.
But why is that? There doesn't seem to be any sort of uncertainty around what the outcome could
At
be.
the end of the day, it's an election. It's the Indian people's vote. And think of it this way, even the principal political party who is so certain of winning by all polls is taking no chances. It's not like they're sitting back and saying, okay, let the votes come. They're doing everything you need to in an election run-up. So I suppose why not wait?
Yeah, why not?
Except for what the VIX shows. Street is already discounted and how?
Yeah, and I was trying to ask a lot of people yesterday because I found it very intriguing, the nature of the fall in the VIX yesterday. Very, very sharp. Usually don't see this, particularly in this period, but just the way it just plummeted. Now, is this essentially confidence that the market will have a swift up move? Maybe so. And frankly, the call put distribution gives us that sense. We were trying to mark this in the closing show yesterday as well. Just look at the two green bars, 20 to 500, 20 to 600, you can even argue 20 to 400 currently as per the distribution. But if the markets stay higher than these levels for a period of time, then the swift short covering that could come in, because the writers, remember last week, the writers were taken to the cleaners. There's so many memes around how, I mean, one of the classic memes last week was they were starting this Nawazuddin Siddiqui dialogue, which is, Roz ka routine hai, utho, pito, so jao. That was what was being cited for call writers last week. And if the market tends to go higher this time around, 22,500, 22,600 could well come into the equation. Lower VIX could be a swift up move. So that is something to watch out for. And guys, I mean, think of this. Nifty Bank up for a third day in a row, despite HDFC Bank weakness. 2 days on a trot. HDFC Bank was down the last 2 days, but the Nifty Bank has managed to stay in the green. Almost nudged 48,000 yesterday. So it's not been bad going for the heaviest weightage index, which might also propel the index.
Yes Bank was doing fairly well.
Yeah.
Axis maybe ahead of numbers.
Hopefully so. I mean, we need all of that to happen for Nifty Bank to continue doing, because HDFC Bank is somehow not showing that spread. And the breadth is positive. I think almost everybody is now saying that, enough of sectoral moves. Now focus only on bottom up. Let's look at specific stocks based on results, based on news flow. And I think it's a packed result reaction day today as well, I reckon.
Yeah, the last two times on that VIX number, you saw such a big fall was 36% and 30% on the day of the election outcome in 2014 and 2019. So it's interesting. It's interesting to see. I think the markets have, and I also feel like while this is so much lower and we're reaching a zone of comfort for the bulls, that could be viewed as a double-edged sword. If everything's priced in, you have one thing that goes wrong, it just goes to show the kind of reaction that may come on the street. But for now,
can I flag off that one thing wrong, possibly, which is not really wrong technically, but remember the aim of 400 ke par. Okay, so that is getting a bit muted in the kind of, I would say, election calls, political rallies and slogans post phase 1. So the government will come, likely, continuity, will have more than enough of a majority, because actually you need just 272. But if you're largely and greatly sub 400, will that be seen as a negative? That's the only sort of uncertainty I can see locally on the horizon when it comes to the elections.
Yeah. Also, just a quick mention on yesterday's trade, you had the small cap index do quite well. So it did gain, was only about 1% off from its intraday, from its life highs. So all that talk about action moving to the frontline names is out to be questioned, because the broader markets are still seeing excessive participation. 17 stocks on the small cap index yesterday were actually locked in upper circuit. So stocks like Tejas Network, to name a few, did quite well. So the action participation still remains in the broader markets. We caught up with the likes of Paris Defense. No real triggers, no real cues, but the stock opened flat, landed up going home with gains of 7%. And I think some of these stocks are giving traders opportunities, because they open flat, but finally build on those gains as they go along the day. And I think that is heavenly if you're an intraday trader, right? You get a good opening, a flattish opening, and take home gains by the time the markets close. So it's been great. I think it's been great for the broader markets as well, even though the benchmark was fairly volatile, and a lot of those gains did get squared off in the last hour. But it's about earnings, and I think we'll move focus back to that. You had a couple of big ones to report, not necessarily from the large cap space, but Tata Consumers, of course, being one of them. It's a mixed bag, and it depends on how you want to look at this one. Revenues were up about 8.5%. EBITDA was also up quite sharply by 23%. To clock in at 630 crores. It beat estimates of about 600 crores that Bloomberg had put out. Margins have seen a little bit of a decline of about 189 bips to come. Have seen an increase, pardon me, of 189 bips to come in at 16%. That was largely driven by higher coffee prices, which Tata Consumers in its unbranded segment could very easily pass on to its consumers. So on back of higher coffee pricing, you actually saw a good margin uptick. Net profit came down by 22%. They had that one-off 216 crores off and recent, which was written off on back of the recent acquisitions that the company has made for the likes of Ching's that we've heard about in the last few months. A couple of things you want to keep in mind. Volume growth was largely flat. 4% is what we saw. International business for Tata Consumers actually done quite well and come in at 7%. Indian beverages has underperformed. Tata Sampat and Masalas have done well, and guess what? With everything going wrong with Everest Masala, I'm guessing people are buying a lot more of Tata's Masalas.
You know,
that will happen in April.
But I'm sure the stock the markets proceed before
that is
anything
actually what someone has
told you,
me.
is it?
Yeah,
Okay.
and people have been talking about what is safe now, what is
And
not
Tata
safe.
is associated with a safe brand. I mean, their branding over the last couple
Brand
of decades
value might
has,
come in.
yeah.
And they have products which are always at a bit of a premium compared to others
Now
in
that
that
justifies
category.
But I
Will
really
people come
contest
in?
that. It's not that Everest is not known for safe masala. It's the market leader. So we're not saying that Tata is better than Everest in terms of brand positioning.
But I
on the
think
masala
consumer
front
behavior
at all.
wouldn't
Sorry, I
surprise
strongly
me
contest
if...
No, I'm saying that right now there is a credibility and reputational hit because of what's happening in
Ask the
Singapore and
ladies.
Hong Kong.
Ask the ladies, Neeraj.
I very much go out and do the shopping of the masalas.
I don't go near any masalas. So.
You're doing akka masalas.
And I'm laying a bet, Samina, between you and me, I cook more.
Moving
that's
on
likely.
from Tata Consumers, well, mixed calls coming in for them. So they've had an upgrade from Nuvama, who seems impressed by those numbers, but CLSA doesn't seem very pleased. But you know what really did catch my eye was Tata Elxsi and 360 ONE WAM, which we've talked about extensively over the last couple of days. But Tata Elxsi, well, the numbers were not impressive at all. They've seen a decline in revenue, EBITDA, and net profit. Most of their businesses are seeing a little bit of a decline. But what you want to keep in mind is this is one Tata Group company that's been the worst performing in terms of stock pricing. They've seen a 15.5% drop in its stock price in the last, from the start of this year. They're down about 8 to 9% in the last trading sessions. Of most analysts who cover this stock, 60% have a sell on the counter as opposed to a buy. Brokerages like Jefferies also don't seem enthused by the reporting of Tata Elxsi. But what is very interesting to note is that while the numbers have not been great, they've actually declared a pretty solid dividend for their investors. For the last year, they've declared their highest ever dividend at 70 rupees a piece, which translates into a dividend outgo of 436 crores, which is more than half its full year profit of about 792 crores. So while the company may not be doing as well, the dividend growth that we've seen is almost 38%, while the earnings growth is much lower at about 17%. So the dividends have grown tenfold, earnings have grown 4 to 5-fold in the last 8 years. And that for me was the big take home. I don't know if Niraj, Tamanna, you have anything to say on this. So interesting, right? So while the company may not be doing well, they're still rewarding shareholders and rewarding shareholders to the tune of giving up 50% of their profits.
Yeah. I mean, I would say one typical IT company behavior as well, because they don't need too much of capital in order to expand business.
But this is also a rare wolf, by the way, amongst all the other IT companies who are actually going out and giving out 60% of profits.
Maybe the extent of dividend, yes, but otherwise most companies are
all
essentially doing a buyback or a
yeah.
dividend, so therefore that's happening. But you know, the problem with Tata Elxsi this time around seems to be that while they are hoping for better growth in FY25, just the Q4 exit rate was so weak that it might become difficult in the minds of the street that the company will be able to deliver a stronger FY25, and that might hurt the stock today. I dare say, watch out for that whole space. I mean, watch out for KPIT, watch out for Tata Tech, etc. Everything might get impacted.
I mean, 3 to 4 years ago, this was a darling of D Street, right? Quarter on quarter, the stock performance, I still remember that very, very one-way unilateral move that Tata Elxsi did over 5 years ago. Another interesting one is 360 WAM, and those numbers are spectacular. And I don't think and brokerages seem as enthused. I mean, look at that. Your total income is up substantially. Net profit is up about 56%. This, of course, what you're seeing is year on years, but they've done exceptionally well even quarter on quarter. They've approved an interim dividend of 3.5 rupees a piece. Jefferies is one of the few brokerages that have actually already come out with a buy call on the counter. They're expecting a 21% upside on 360 WAM. They do believe that the wealth business is in fast lane with a 35% year-on-year growth and active ARR, which is assets under management. So that's average recurring revenue and better yield. So I think 360 WAM could be getting a big thumbs up this morning. Tata Elxsi may swing downward.
What a business to be in.
No,
I mean, 361 WAM and all of those
capital market players.
What a time. Where I think Indian investors or Indians are awakening to
financialization of assets.
And that tide is lifting all boats. Not quite lifting.
But you know, Tamanna, while the listed ones are making good money, I think the gestation period of some of these businesses, while the revenue is sticky, the fact also remains it does take some time to build out a book, right? Because while you're also in that space of educating investors. It's all about financial inclusion. It's all about doing that whole process, which, I mean, people like us are also helping in terms of, education, inclusion. And I think that's where the machinery really is.
Yeah.
So we should also be glad because we are playing a small role in this.
I would hope so. I would hope so, definitely. But I was saying, while that tide has lifted all boats, I mean, ICICI Pru is one boat which is going to have rough sailing today because numbers aren't looking great. I mean, I'm just putting it as politely as I can. Net premium income is okay, fine, up 17 odd %, but VNB, that's value of new business, the margin has dropped nearly 10 bips to 21.46% versus 10 percentage points versus 31.97%. The VNB is down quite drastically, down 26%. The annual premium equivalent, though, is up only 9.6%. Mixed sort of views over here from brokerages. So Citi has downgraded it to neutral with a target price of 645 rupees, which is still a small premium to what it was earlier. Motilal Oswal is a bit more positive. They've retained a buy with a 700 rupee target price and see an upside of 18% because Motilal Oswal is I would say a little more optimistic of what would come and premium growth delivery, etc. But suffice to say, ICICI Pru has not had a good quarter or a very great year. So you might see, a bit of pressure coming in there. Cyient DLM, on the other hand, seems like good numbers, definitely. Your revenue has gone up 30%. This is year on year for Q4. EBITDA has gone up about 19%. Margins are down, though, 101 bips, but net profits are up 80%. For the quarter, for the year, it's up 92%. So it's been good in terms of Cyient DLM. Motilal Oswal again has reiterated a buy. They've set a target price of 840 for the stock. So I think you might see a good move there. The third one that I wanted to talk about was Puravankara, because you've seen real estate sort of make a comeback last couple of trading sessions. Those stocks have been doing well. And they've received bids to redevelop a residential project in Mumbai. I'm told it's in Pali Hill in Bandra. So, Samina, in your locality.
I have no idea which this building is, by the way. I was telling Alex this. I'm like, where is this?
So the gross development value is estimated at 2,000 crores. And remember, this is a very lucrative space. And there are more in Mumbai that Puravankara is in the midst of inking. So you might see some bit of a move there. So that's the third stock that I wanted to talk about in the first round, yeah.
Yeah, but just 3 stocks. Well, Puravankara was interesting, and I mean it's a large area, so it'll be interesting to see which one is this. But 2,000 crores seems good. Prestige has one. Now Puravankara has one in Pali Hill from amongst the noted developers, in addition to the Mumbai-based
Oberoi
guys.
does as well on
yeah,
Pali
so
now,
aside of
yeah.
the Mumbai-based ones, for Prestige and Puravankara to now make Pali
Yeah, and they've
Hill.
done some interesting, massive constructions there.
So a
sort of
very,
out of
very
nowhere.
Tony neighborhood for those viewers who don't
Yes.
know. Very fancy neighborhood, and you know,
Yeah, this must not be a very large area.
with a lot of old but very highly valued buildings and properties there. So for these players to come in and unlock a lot of value.
Yeah, the place where Bollywood resides. Okay, just 2 stocks on my radar today. Actually, we could make it 3 because telecom kind of fits the bill. So Indus Tower is interesting because Economic Times says that Airtel is eyeing Vodafone's 21% stake in Indus. I mean, the valuation remains a bone of contention, as is always with any deal. But I would reckon that if this is happening, the market may want to believe that there could be some upsides for Indus Towers, to watch out for that one. Simultaneously, just want to mark Bharti Airtel because Cities raised the target price on Bharti Airtel to near 1,500 now. It's a stock that's actually given some tremendous returns, and there is some more upside that Citi believes will come in. Now, if the ARPU argument, or if the the tariff argument turns out to be true in 6 months' time, then on hindsight, people will believe, oh, this move should have been anticipated. So no surprise that the stocks have done what they have done. We've spoken about telecom ad nauseum here on the trade setup a number of times now for the last few days, but watch out for Airtel and Indus in today's session. And watch out for Rama Steel Tubes. It's a company with a market cap of 2017 crores, and the board has approved a fundraise of 5,000 crores. That's nearly a 20% dilution on a fully diluted basis. That's large. It was up about 6% in trade yesterday. Let's see if the momentum carries it further. So this is one more stock to watch out for in trade today.
Just a few more that I wanted to mark, which could be interesting. So one of them is Dr. Reddy's. The company has issued a voluntary recall of a certain powder, sapopetrin. I'm not even going to try the next bit, but they have done this due to decreased potency. You might see a negative sort of reaction there because of it. Lupin had a US FDA visit, and that facility in Aurangabad has been classified as voluntary action indicated, so not too stressful. A VAI usually isn't too stressful, but then considering that Lupin has had quite a bit of a run-up, you could see a bit of pullback on the back of this. M&M Financials is the other one I want to talk about. A huge beating yesterday. The news today is that they've approved raising of borrowing limits to 1.3 lakh crores from 1.1 lakh crore rupees. Could you see a technical sort of pullback? Because at the end of the day, how much of an impact does 150 crores have? And remember, it was defrauded from the company. They've caught the problem. So M&M Financials is one that I would watch out for.